Good morning, traders. Chris Bus here. I want to welcome you to Before the Bell, where you'll find actionable content to set your day up for success. It is 6:23 as I'm starting the video, and if you're new here, please run the video at 1.5x. I don't speak particularly quickly, and I tend to get long-winded, so if you run that video at 1.5x, you'll get through the content quickly, and I don't think you'll miss a thing. Before I get started, I want to thank Rex, Jody, Mike, Steve, and Rich for the donations to the channel. I really appreciate it. I want to remind everyone that at the top of every blog post, you'll get an opportunity to make a similar donation as these guys, and I'd really appreciate it, especially if you're finding success with the content that I provide. Like yesterday, if you're an active trader, you should have absolutely had a windfall yesterday. I mean, it doesn't happen every day, but yesterday was one of those days where every level worked. The coaching, if I could be so bold as to say, was right on the money, and you can go back and listen to yesterday's video if you care to. I was really pleased how everything worked out, and I hope that you were able to benefit from it yesterday. So, taking a look at today, don't forget today is an option expiration, being Friday. Actually, it's Friday the 14th. I don't think I mentioned that. We've got option expiration. Make sure you run through your positions and don't get any rude surprises. If you got something expiring today, make sure you take care of it. Also, keep in mind today, if there's fireworks, it might be a good day for lottery picks. If we get a runner, either a big bounce or a big rug pull, those can be very lucrative. Only bet with money you're happy to lose. Most lottery tickets end up on the floor, so keep that in mind. Don't get crazy. Don't get stupid. It's a great way to lose a lot of money. So keep that in mind if you're a lottery player. Looking at markets, equities are flat. Oil's up about 1.4%. Bitcoin's off 1.6%. Copper's off a little bit, 0.4%. Gold is not doing anything. Nat gas is down about 2%. Over on the macro front this morning, we've got retail sales. That'll be interesting. We've also got consumer sentiment at 10, which is always interesting. Industrial production will be closely watched. And we've also got business inventories. And I think we've got a Fed speaker or two out on the docket. Earnings fire up today in earnest, with JP Morgan, Wells Fargo, Citibank, and BlackRock getting into the financials. That'll be interesting to see. I actually saw some commentary out there saying that they expect Q4 earnings for these guys to be relatively muted. I didn't really see the reasons why for that, but we'll see. I mean, maybe expectations are low and they can blow it out of the water, and we can get some things rocking with financials. That is one of the sectors that I'm relatively bullish on, along with the other cyclical sectors, industrials, commodities, reopening type trades. So we'll see as earnings roll out. Now I'm starting here on the dollar, but I also want to point out, if you're new here, you can go to tradersprofitcompass.com. On the homepage, you'll find a link over in the show notes where you can drop in your email address. Here's some additional information. It's double opt-in. A lot of people get thrown for a loop when that confirmation email gets sent to your junk folder and you never find it. So please look there, and once you click it, you'll be in. Also, here's some places where you can find me on social media. I am not as active as I probably need to be and should be, but I do make occasional posts there. So please add that to your follow list, and you may see some stuff that you find interesting during the day or after hours. Starting here with the US dollar, we saw some additional weakness yesterday. Those are going to be tailwinds for the sectors that we just talked about. Up here, commodity complex, cyclicals, industrials, materials, and generally a headwind for tech and bubble stocks, especially if rates are rising. So I think there's going to be some support here at 94.50. I wouldn't be surprised if there's a hesitation or a bounce right here. But then if that level goes, we've got the 200, and then we've got another level of support at 93.50. And, you know, if the dollar gets down that far, and especially if that level breaks, it's going to be rocket fuel for commodities and that kind of stuff. So keep an eye on the dollar. I know most of you guys probably aren't trading it, but it is a great barometer of what's going on. And there's an adage in trading: if you get the dollar right, everything starts falling into place. So it is something to watch. Wanted to show you the Nasdaq Oscillator right here in the middle. You would have thought that with the rug pulls that are going on out there that this would have been a lot lower, but it's not. Still right here in the middle of the range, not particularly predictive of anything, but going to continue to keep a close eye on it. Moving on to SPY, we're right back down where we were the other day, testing the uptrend line and testing the 50-day. Bulls certainly don't want to see that fail. So this is another place for the bulls to step in and try to save it. We'll see if they can do that. Also take note of the bear cross on momentum and RSI walking the line between bullish and bearish regimes at 50. Keep an eye on that. It's going to be really, really important in the days and weeks ahead. We can see here on the 2-hour, we got rejected here at the highs. Beautiful place to try a short when this first candle came up, was rejected, and then I don't have it drawn in here, but there was a gap to fill, and it filled that. And then certainly we had talked about how important 470 was to the whole scenario, being the top of a $20 range. And as soon as that broke, that was another signal to get short. So, I mean, just from there, you had to move from 470 to 464, right down to the tag of the 50. And that was good for $6 right there. And the nice thing about these moves is, you know, no chop, no scary kickback candles. Just, you know, get in and hold on, and then look for support to cover for you active traders. Now, for your more duration type traders, you know, going back to the daily chart, and even here we'll see it on the 2-hour chart. If, not a prediction, just a scenario, if we were to break the 50, then I think you can go out in time and get yourself some puts and then just stay short against the 50. Why? Well, number one, it's a very clean, significant support line, EMA. Nothing good happens under the 50. And then once you're under the 50, I would say at a minimum, you're going to go down and check this low, you know, a back test of this low, and potentially come down to either this low down at 453 or at the bottom of the box at 450. So, and then that goes back to our other principles. Once you go out of a trading range, you don't want to go back in. I think that's something that I've tried to drill into your head, that it's uncanny how it works and how often it works. So that's your base case. I'm shooting for a move to the bottom of the box, and I'll react at levels along the way and see if I get price action that would lead me to believe that it's not going to make it. So I'll show you a couple of other examples. Fake breakout. Fake breakout of the box. We go out, we come back in. Where do we go? Immediately to the bottom of the box. We break the bottom of the box. We immediately go down to the next level at 470. We go down. We don't make it all the way to the bottom. We come out, another fake breakout, back into the range, and back down. So that can be a rule of thumb that you can really trade around and make some money. I want to make a point of this PPO profile, and it's something that I always keep an eye on. I don't often in these videos make a point of mentioning it every single day, but I want you to look at this profile this morning. We rolled over from a high level and we took the plunge. We went from the bullish regime to the bearish regime on this move here. Then we had a kickback rally. Here's the up cycle. Look at the profile. We go up to the zero line, and then we start curling over, and we're very close to a bear cross. Bear crosses at the, just either at the zero line or just under the zero line are very bearish setups. It's just as bearish as a bullish crossover would be above the line. So when you get these crosses near the zero line above, very bullish. You get a bear cross just below the zero line, very bearish. So, the bulls got to step in here, and they could certainly do it. I mean, the 50-day has been a place where bulls step in all the time. So it's not a given that this just rolls over. All I'm saying is this is a very critical spot, and the indicators would lead you to believe that price is in a very vulnerable position. And here you just see it on the 30-minute chart. That'll give you some extra resolution on the levels if you're actively trading. I've got the fib levels here. We're right at the 50% halfback retracement. We've got a couple levels to go. I would say a break of 463 would open the door for a move down to this 457 here at this prior low that we just talked about. Qs. Fake breakout into the $20 trading range, went down, undercut, recaptured it, but died right at the 50. And that was a level there at 390 that we said was really, really important. So now going on, we had this bear flag drawn in. We broke that flag, came down, and now we've undercut this 380. I think that's going to be very important for the bulls to recapture. And one thing to remember, a couple things. Monday, market is closed, Martin Luther King holiday. So we've got 3 days of weekend risk. And remember what Peter Brandt, market wizard, technician, always says. One of the most telling things about market sentiment is those last 2 hours of trading heading into a holiday weekend. Do market participants say, okay, we're fine. we'll ramp it or we'll keep it where it is, or do they get cold feet heading into 3 days of weekend risk and say, I'm getting the F out. I'll see how the dust settles on Tuesday of next week, heading into January OPEX on, I think it's January 21st. Yeah, next Friday, January 21st. So that's going to be very telling. And usually what happens is they will park price at a place where it keeps everybody guessing. And a place on the chart where that would be down at 372 right here. Park it right on that low where, both the bears and the bulls would have something to think about, something to chew their fingernails on for 3 days, waiting for, futures to open and then see what happens. So anyways, I would keep 372 in focus. On the bullish side, if the bulls can recapture 380, then that would be a very constructive thing. And you can see here on the 30-minute chart, we're just undercut this key support zone by a little bit. So it'll be important right here to kind of hold the line at 378, like I said, and possibly recapture 380 to be on more secure footing for a for a hold, for a save. But below that, I think you got to lean bearish and look at this 370 area at the prior low as a potential target place. IWM, we said, has been the most bearish of the indexes. Why? Because price is below the 200 with the fast moving averages all pointed down and making a nosedive. So here on IWM, we had this flag structure and that broke. So now we're sitting on the top of the old gap. And I think I've been saying for quite a number of days, I think this thing is coming down to 210 to test the low of this big box that we've been watching for literally a year to see if that holds. And I think that's a very important level and will be a telling level for the market. Why? Because if you've got a consolidation range that has spanned a year and it breaks, number one, you're going to be going down. But number two, that'll make it look like just a massive, massive market top when price hovers for a year and then finally breaks. Here's a 30-minute chart just to show you the detail and the various intermediate levels. We got a low here at 211.5 where price could find support. And then we've got a low down here at 209.50 where it undercut 210 just for a couple of hours and then recovered it. So that'll give you some places to shoot against on IWM. Facebook. We talked about 334. Fake breakout. Fail. Bottom of the box. Fail. Next level of support to the dime right here at 327. I think that's the key this morning. Below 327, I would be favoring 324, and then that's going to be a big, big level. Why? Reaction low, reaction low, reaction low, support. That's a big line in the sand. If it breaks below 324, I think you're going to find 316, and that would certainly be a place where if you weren't doing anything with Facebook, that would be a level that I would have alarmed if things get crazy this afternoon and price breaks below. You could see a waterfall move back down to 316. Again, not a prediction, just a scenario, but you can see that below 324, you've got a void in the chart. and you can see all this trading between 324, 334, and 340. That's been the meat of the trading for quite a while. And if 324 breaks, then I would expect things to start breaking down. Yesterday, we had focused on this consolidation range below resistance at 176. That broke. We said if that broke, it's going to go right down to support. That's exactly what happened. We got a couple of hours where it held the top of this support zone that we had at 173.50, and then finally let go down to 172. So today, 172 is your pivot. Any kind of break below, I think you need to be or can be short against that level with a stop just above, and you'd be looking for 170. And then you've got reaction lows at 168, couple of them right at the top of this box, and that coincides with the 50. So I think on a break of 172, although you may see a little bounce here at 170, I think your target is the 50 at the top of this box, top of the gap. And it held the first time. Actually, it held here and here. And so if it were to break the top of the box here and break below the 50, then those same comments that I had before about the 50, I think it would be a very objective trade to go out in time if price on Apple loses the 50, to get short against the 50 with a stop just above, and then you've got a gap fill, and then potentially another gap fill, and then you've got support down at 160. So you could see, some fast moves to check off these technical boxes of filling open gaps, and then find yourself down here at 160 in the days and weeks ahead if they keep going after these generals. Tesla was a gravy train yesterday when it stalled at 1120, straight down, no scary kickback candles or anything like that. We had 1080 as being a very important line, and even if you didn't get this one, certainly a break below 1080 was another opportunity to get short, and that resulted in a $50 move from 1080 down to 1020. Here this morning, I think you can stay short against 1040 with a stop above. If you got a little kickback rally of $10 or $12 that died right here at 1040, I think you can get short and then look for a move back down to 1,000 to back test this low. Microsoft, oh my God, what a gravy train yesterday that was. Here it is on the daily chart just to show you. I mean, this is a $2 trillion company, if not more. I don't know where it is exactly, but to move from 320 to 305 on that size of a company, I mean, you just don't see that every day, and I hope you got part of that. I want to show you the 60-minute chart and just recap it. I've since removed a gap that was there, but yesterday morning, if you go back and listen to the video, we were talking about watch 319 like a hawk. It was sitting on top of a $5 gap that went from 319 down to 315, and we said you break into the gap, you get short, and you got that $5 gap fill right out of the gate. Also, note the fake breakout. We opened higher, and they faded that right away and then moved into the gap. That was a signal to get short. we said that 315 at the bottom of the gap was the last chance for the bulls to save it. Go in, fill the gap, and then bounce. Didn't happen. It broke. And then once 315 broke, there was literally nobody home. And we went down and even blasted through this prior low at 306. And I want to just go back one last time to the daily chart. 305 was the breakout level from way back here. We had a lot of consolidation under 305, and then once it broke out, it was a rip up to 345, where we saw 3 tries to get through and failed each time. Now, what makes this ultra significant? Backtesting a breakout is fine, but losing the breakout is terrible. If you're a bull. So this has got to hold. Absolutely, absolutely, absolutely has to hold. Or I would say your next move is down to the 200. That would be a technical check mark, right? Go down, test the 200. And if that doesn't hold, I hate these prognostications or generalizations, but it's over. Once you lose the 200, you're on the wrong side of everything if you're a bull. And I want to show you one last chart on Microsoft. We are below weekly trend coming off the COVID low down here at 130. I've dropped in the fibs in purple. And we lost the trend. We lost the weekly trend. And remember, the longer the time frame, the more important the signal. Put this in the category of things a bull never wants to see. And that is losing a weekly trend line of significance. Going back, almost 2 years, holding this trend line like a champ the whole way. And now we've lost that trend line. And look at the retracement levels. 38% is 265, 50% is 240, 618 is 220. That happens, right? That happens. So don't think that, oh my God, this is just a, whatever. It may prove to be a whatever, a break and then a recovery. But you got to really respect this break on a weekly chart. And I'm going to go back and do some chart work on the other mega cap names to see where the weekly trend lines go. But in this particular case, bad. Amazon rejected at 33.15. We talked about that yesterday. And you got 33.15 to 32.24. That's $90. $90 move right there. Hope you caught part of it if you're an Amazon trader. That was just a great move. Now this morning, I think your pivot is 32.45. I think you can stay short against that. Of course, if you got weekly options that expire today, you're going to have to be very, very careful. But regardless of what you got and how you're particularly trading it, I think you can stay short against 32.45. I believe that is your pivot point today. And given it's sitting here at 32.25, it's got to have a $15 rally just to get back. So anyways, rolling over, you can see that on the indicators as well. We talked about Google being relatively strong, and it has been, but fake breakout, move back into the range, fill the box, break the box, came right down to our 27.85 support level, broke through that. I think you can stay short against 27.85 and look for 27.50. Below 27.50, you're going to come back and check this low way down at 26.80. Netflix has been a disaster for quite a while. Now we're coming into a key spot at 515. Breaks below 515. I think you're going down to 470 at the bottom of the box. And, yeah, I mean, that's a place where the bulls could step in. But like we always say, if nothing good happens under the 50 here in green, certainly not a lot good happens under the 200. Now we've got price below everything. We've got it in a $90, back in a $90 trading range. We've got the fast moving averages diving down with the 8-day and the 20-day already below the 200. Those moving averages are going to be resistance on the way back up. So Netflix in a very, very bearish posture. Here's semis right along this line at 312.50, proved to be a massive problem. We had a couple of fake breakouts back into the range. We had another try yesterday. Now we're below the midpoint of the box at 302.50. And basically testing the 50-day here at, I want to show you the 60-minute chart. Yeah, the 50 is at 298. I think you can stay short against 302.50. And then a big level will be 298 at the 50-day. And just like all the other commentary, if you lose 298, I think you can be short against it and go out in time with a stop just above the 50, and then see if your first move isn't to check this prior low here at 288. You got a low back here at 288 as well. And then, of course, if you lose 288, then you go down pretty fast. I want to go in and just show you a variety of charts where you can set yourself some alarms. Here we've got 3M testing the 200 from below and this line of resistance. Notice we've got a big volume over price bar here acting as resistance, and then you got a big void in the chart. I like the idea of being long 3M on a break above 182. Then you'll have not only a big volume over price bar acting as support, you'll also have the 200 acting as support. I wouldn't be surprised if you got a relatively quick run up to 190 in that volume over price void. And, I like industrials. And also notice the bullish profile on PPO in particular. We see that RSI is broken above 50, so that's good. But notice that we had a low in momentum here with price at 174, and then when price broke down to 170 to make a new low, momentum was higher, so that's your bullish divergence. And now, even though price has not broken above 182, we see that momentum continues to rise, showing you that there's some buying pressure under the surface. So that's another reason why I like this setup, in addition to, price right at a key spot on the chart with a void just above. So I like 3M. I would be setting your alarm at 182 or 182.50, wherever you feel you want to take a shot long. Here's our friend AFRM. We had shorted this at 85. We covered it down here at 73, had a kickback rally, and fell apart yesterday. I think you should have an alarm at 70. And you get a break below. I think there's a good chance that we come down here and test these lows at 57.50. I just took a peek at the PE. Negative earnings, loses money. That's not a great, it's not a great environment for negative PE stocks. So I would have an alarm at 70. On the other side, cruise lines have been shaping up. Notice here, we've taken out the 200. All the fast moving averages are turning up, and we've got a line right here at 2375, that if it were to take that out, we move into a relative void on volume over price, and I think you'd get a pretty good pop, probably I would say up to 2650 for starters on that. So reclaiming the 200 is always important, and I think getting past this 2375 would be a marker as well to alarm to get long. Costco, very important spot on the chart. We've dropped from 565 down to 515 in short order. You can see that price understands that this is an important spot. Came down the other day, got a little kickback rally up to the 50 that failed, and now we're right back down to trendline support and lateral support. But take note, and if you've been with me any amount of time, I put value on this type of a setup. Why? Trend line below the 50 at support with a monster void just below that. If price falls into this area here and loses the trend line, notice that the next volume over price bar comes right in at the 200 at 460. So that offers about $50 of downside on Costco. Great company. We all know that, but we trade price, not whether they're good companies or not. So I think 515 is a really, really important level to mark on your chart. CROX, same kind of a deal, not quite as dramatic, but you can see that this 124 area has been an important spot on the charts. We gapped up, came back to test it on a couple bars. We tested it here, and then a bunch of times, it keeps knocking on that door of 124, and if that breaks, I think you're going to come down here towards 107, 105 area, and that would be a nice trade to take, I would think. Not as strong as Costco and some of the others, but still, I think an interesting setup. Here's one that I've been watching. If you've been in the trading room, I post about it quite regularly. It's 3D printing, sitting right here on a massive ledge, and you can tell that price knows it's really important. It's been walking this thing for going on 2 months. It was tested way back here and it held. I mean, look at the void. I mean, this thing could go down to $10 in a heartbeat if things fall apart. Keep an eye on 3D, and whether you say it's 20 or it's 19 or it's 18, wherever you think you want to take a shot, there's nobody home below, and I think that's going to turn out to be a gravy train if it breaks. Support is support until it isn't. So keep that in mind, but just understand that below there's nobody that are going to be buyers at that level. Marriott testing the upper end of the range here at 167.50. In that cyclical reopening category, I like Marriott higher on a breakout above, 168, something like that. Set yourself an alarm, and I would take that breakout if in fact we get it. And then wrapping up, I want to show you this relative rotation chart. This is a 3-week rotation on steel. I've got all the steel components in that sector down here really shaping up. We've got, over the last 3 weeks, we've had a big rotation from lagging into improving and leading. So normally how this rotation goes, it's a clockwise rotation. Things lead, they weaken, they lag, and then they improve, and then they lead again. So everything in steel is making that rotation, and usually what a good strategy is get them, look for compelling technical setups on improving stocks, because if you can get a good entry as price improves and relative strength improve and relative rotation improve, then you get that rotation into leading, and that's where you get your gains. So steel is in that material sector, and we said that should be one of the segments that does well in this environment. So I've said it before, I'll say it again. I think we're entering the golden age of long-short trading, where you've got vicious rotations out of certain sectors into others, and that sets up the long-short portfolio where you can be short the sectors that are falling out of favor dramatically and into sectors that are being favored dramatically, and then you can have some long positions and short positions, and that is a great feeling when you get longs and shorts working at the same time. So I hope you like the analysis. I hope you have a good day of trading. Let's see how we wrap up the week, and don't forget, last 2 hours heading into a 3-day weekend are always very, very telling. So we'll be watching for that closely this afternoon. Hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.